Thank you very much. I really remember an experience which was 12 years ago when the time was really too short. I think this was unfair. So I took a little bit longer and they switched off the light. But I continued speaking, no problem. It's a little bit cozy, but you can continue speaking if it's dark. But then they switched off the electricity and then I had to stop. So don't do this. Yeah, it's my pleasure to be with you here today. Very exciting markets, as most of the times. And I would like to share some views with you. It must be short, and it is a summary. And some of the commodities which are important and some of the countries which are important I cannot talk about. But please, please feel free to contact me for additional information. I'm very happy to give this. This is our function. We want to be of service to you. And, well, who remembers 1961? And this is an old table from 1961, world exports of oils and fats. Palm oil exports in 1961, 0.5 million tons. Just for the history books. Exports of copra, 3 times as much as the exports of palm oil. Soybean oil exports, 0.2 million tons. Sorry for that. Big changes today. Palm oil, 62 million tons. Palm oil, the big elephant in the room, accounting for 63% of world exports. Very, very important today. And we have seen over the past 12 months the failure in palm oil. The failure in palm oil exports could not be offset by other oils and fats. The dominance of palm oil is just too big. And the problem we had, part of the problems we had due to the drought-caused losses will be carried over into the next 12 months. Now, we are doing this since 1958, analyzing the global market, and we do this on a monthly and quarterly basis. Very important. You cannot understand the market with annual balances, and I want to encourage you to look into the details and to look at complete supply-demand balances, not just on production, not just on exports. A decline in exports does not necessarily mean a decline in consumption. And during April-September, world exports of all oils and fats declined by 3.3 million tons. This is a lot. And the market took this as an indication for declining consumption. But this was not wrong. This was not right. Consumption continued to increase, and the decline in imports resulted in a heavy decline in stocks in the importing countries. If we want to understand what happened over the past 2 weeks, with palm oil dropping by $80, while soybean oil and sunflower oil stayed flat or even appreciated, we have to go into details. First of all, this decline in exports and this decline in prices of palm oil and the widening price discount to $100 is not justified by the fundamentals. So what happened? Probably more important for price making is expectations, emotions, fund activity. So there was a lot of fund selling. And there was a lot of expectations on the side of the consumers that production of palm oil would recover and exports would recover. And so let's wait for tomorrow, for next week. And prices declined probably also because some of the producers were hearing reports about recovering Indonesian production and sold into the declining market. So trading, timing of purchases, all this came together. It is a price decline which is not sustainable. Prices have already started to react. Consumers, of course, have difficulties in finding the low. Where is the low? You only know this backward looking. Probably the low was on Monday. Too late to buy. You can still buy now, a little bit higher, 60 ringgit higher than on Monday. But this market is going to turn around, and I will give you some examples why the next 4 to 6 months will still be difficult months before the situation improves. And you know, you have all these factors: supply, demand, weather factors. You have on the one side you have palm oil, which is being produced independent of price. You produce it on the right time, on the right day, and you cannot wait. And you have soybeans, rapeseed, sunflower. You only crush soybeans if you have a good margin. So, you know, various influences, of course, government, financial markets, and weather, and expectations, emotions. Now, what happened over the past 12 months? For the first time ever, world production declined by 1.3 million tons. Last 12 months. This is unusual. Several factors, partly palm, but partly structural factors. Farmers are running away from rapeseed, for example. So rapeseed production is declining, not only because of weather. Consumption continued to rise. And as a result of that, world stocks declined by around 5 million tons. Part of this reduction occurred in China. Rapeseed oil stocks down 2.2, 2.4 million tons. This was a bearish factor because this reduced the Chinese import purchases. But it's still a reduction of stocks. So these plunging stocks will be a burden for next season. We have to take this into consideration. The outlook for 2016-17, global outlook, is for a very good increase in production of probably 10, probably 9.5, probably close to 11 million tons. We don't know yet, but a significant expansion in production, of which we think October, September, 5.5 million tons up for palm. January, December, we currently expect 6 million. It may be a little bit on the high side. We can discuss this in a minute. But after a decline of 3.1 in the past 12 months, a strong recovery of palm by 5.5. Lauric oils will be higher. Palm kernel oil, coconut oil production will be higher, about 0.7 million tons. Big change. I'm very bearish on lauric oil prices because consumption of lauric oil has started to decline with a time lag, and it's now down, while production is going to recover in the coming months. And this expectation of rising stocks has already started to affect coconut oil and palm kernel oil prices. We are likely to see the premium to dwindle in 2017, and this dwindling and the dwindling of the premium relative to palm oil, this may be relatively rapid. Soybean oil, we need a similarly large increase in soybean oil production, 2.9 million tons. This is almost the same increase as the past 12 months. We have enough soybeans for the time being. But we need more soybean oil. Rapeseed oil declining by 1.0 million tons approximately. Crop is down. Crop world production is at a 4-year low. We are going to reduce our stocks further. The bullishness implied in rapeseed oil is now partly being dampened by the decision this week that the government is going to release rapeseed oil stocks again, 100,000 tons a week. If they really find this 2 million tons in the domestic market, and if they really sell the 2 million tons into the market, I think the selling yesterday was quite encouraging, then this is a bearish factor. It will reduce Chinese import requirements of oils and fats and will help the market to find a good supply-demand balance. This is a factor we should have to look at. So rapeseed oil down. Production-wise, sunflower oil, record crop in sunflower seed. Farmers, Ukraine, Russia, they are very happy with the prices, low production costs, they continue to expand, harvest reports are favorable. We have again raised our crops for sunflower seed for both countries. We have made a slight downward revision for Romania, Bulgaria, European Union, but on the other hand, the Argentine crop looks very good for sunflower seed. So it looks like we are going to see a sizable increase in sunflower oil exports. This is already in the market. There has been a lot of purchases. Sunflower oil is the only oil at the moment with a good increase in production, contrary to soybean oil and palm oil. Good increase in exports, sorry for that. In October, December, October, February, sunflower oil exports are going to rise, and there is the risk that some of the producers and exporters have overcommitted themselves. So we have to watch whether the export commitments for October and November can really be executed. So this is the breakdown. Olive oil production, surprising declines. Olive oil in Spain, in Italy, also in Greece, Tunisia, Morocco, they all have drought problems. So yeah, that's more or less the total situation. And now it becomes interesting. So we have production rising sharply. 10 million, whatever. But we have the burden of low stocks which we carry forward. And we must not forget this, because the low stocks in the producing countries more than offset the increase in production, resulting in a decline in world export supplies of all oils and fats in October, March. Very important. So the importing countries which seek for a replenishment of stocks will have to wait until April, May, June. And nothing can come, and nothing should happen. If anything happens, we are in trouble. Farmers selling in Argentina. Are the crushers getting enough soybeans? Farmers selling in the US? Question mark. So nothing, and also we need a recovery in palm oil production in October, March. I think we will get it, mainly in Indonesia, but most of the recovery will occur in April, December, not in January, March, not in October, December. So this is a very important factor, and this influences sentiment. It should influence trading policies. This is one of the few occasions at which the risks are small for producers, like palm oil producers, to become more reserved sellers. Are they going to do this? Are they saying, oh, let's be a little bit more reserved sellers in the next 2-3 months because we are at the beginning of a seasonally low production, although I think that the seasonal decline will be relatively moderate, if at all. But still, production will be, particularly in January, March, relatively small, and stocks are small, very small. So there is little risk for producers, palm oil producers, to become reserved sellers. Will they do this? Will they go back and say, oh, call me next week? And what will the importing countries do? So these psychological factors, are we getting another change in the market sentiment or not? This will be a very important factor for price determination. And I expect high volatility. Once consumers come, they will find that it's very difficult to get physical supplies for November, heating up the market, probably overheating it again, and then probably rallying in the next 2, 3, 4 weeks, and then falling back again with reserved consumer buying, whatever, probably rallying again in January, March, or January, February, somewhere. So I would see high volatility, but prices we had last Monday, I think, close to the lows for the time being. We have to wait until April, May, June, and forward to get more price pressure. Palm, the big driver, 30%, although it's produced on 6% of the world oilseed area. Average growth, we keep this in mind, average growth in world consumption over the past 20 years, 5.2 million tons per annum. Big changes. Now let's look a little bit on palm before we go into soybean oil, and to the conclusions. And you please stop the time a little bit, right? I call this success story, and this success story was, of course, interrupted in 2016, but it is still a success story, and I hope it continues to be a success story, although there are so many challenges like labor, yields, management, and acreage. The acreage problem. Do we have enough acreage for expansion to get this 86 million tons, which we think we need? We have scaled this down already. We have shifted some palm oil into soybean oil, but we still think in 2025 we need 86 million tons. 24 for Malaysia, 47 for Indonesia. Can we get this? So we are talking now about the yield recovery. How quick will the yield recovery be in 2017 and 2018? From 2020, we will discuss, are we planting enough acreage? And I don't think we are planting enough acreage. And I don't think that with the recent development in yields, we cannot get 86 million. So the market will find its way, and prices have to be at the right level to reach the required production. And if necessary, ration demand, probably mainly in biodiesel, if necessary. So this is a challenge. Our estimates for the moment, 59 million tons for this calendar year. This is down 3.1 million tons from 3.3 million tons from last year. World palm oil production this calendar year declined by 6.5 million tons below potential. Unprecedented. And prices are low because we have so much soybeans. So I come to this in a second. So I don't know whether we can reach 17.8. I think so. I expect that October, December production will be higher than July, September in Malaysia, which is a rare occurrence, but I still think this is going to happen. So this brings me to 17.8. Indonesia, 32.2, probably a little bit on the high side because of the very, very low production between May or April and August. So we'll see. We are going to update this regularly. Yields in Malaysia, lowest in 19 years in 2016. And now what is important, I do not expect that yields come back next year to the average. 4.3 tons or 4.4 tons. We are not going to see this because January, June 2017 will still be influenced by the previous drought and the changes in the sex determination and lower female flowers and lower fruit bunches ready for harvesting, available for harvesting at least in January, June, probably even July, September. Higher bunch weights, yes, but I still think that yields will be depressed, will recover considerably, but the real increase in yields, I think, is going to come in 2018. Yes? Our forecast for 2017, 20.5 million, and this 25 million for Malaysia is, I think, on the high side. 35 million tons Indonesia may be a little bit low, but this is the numbers we work with. You see the yields for 2017 are still sizably below average. Now, and this is important. Now let us look a little bit, October, December, and January, March. We want to know what is the likely price trend. So this is our production estimate. Year-on-year increase, 0.4 million tons. mainly in Indonesia, and a further big increase in January, March. But if we include the stocks, world supplies of palm oil are down 2.5, 2.6, whatever, 2.7 million tons. We don't know this yet, but what we know that the low stocks in the producing countries will more than offset the production increase, so that export supplies from both Malaysia and Indonesia are going to shrink as compared to a year ago. So why is the market reacting to trade talk or to newswire talks that, oh, Malaysian exports are relatively small first 10 days of October. We are losing market share to soybean oil. Bullshit. This is not happening because world exports of soybean oil are not increasing. At best, world exports of soybean oil will at best stagnate in October, March, probably decline. We don't know yet. Depends on farmer selling in Argentina, for example. The US cannot help. US has already exported maximum export sales for October, December, which are 500,000 tons. Forget it. This is just a few days of world exports of palm oil. So this shift everybody is concerned about, this shift, oh, market share losses to soybean oil, is bullshit. It's not going to happen because soybean oil export supplies are not rising. Okay? So we have to put everything in perspective, otherwise you are lost. And we can provide numbers if you want. Going to soybeans. Soybeans are ample. And yesterday's report from USDA has confirmed this. Huge crop. And we probably ask ourselves, what are the Americans doing, what other countries don't do? How can they raise their yield so quickly? We think we are going to raise dependence on soybeans continuously for the next 12 months, another above average increase in soybean crushings to offset the low supplies of other oils and fats. Supplies are still low because stocks are so low, eating up half of the supply, production increase. But you crush soybeans only if you have a margin. And the problem is that it is difficult to sell the meal at the moment because meal demand is poor. Feed grain prices are low. Supplies are ample. Soybean meal prices are relatively too high. So the soybean meal has to price at a lower level to find sufficient demand, and oil has to find its largest share of the crush value. Oil share increased, we may get 38 or 40%, which would imply that with unchanged soybean prices and weakening meal prices, absolute prices of the oil would rise. So we have to keep this in mind. But still, the exports of soybean oil, which are likely to rise in April, September, this is very small as compared to palm oil. So palm oil remains the big driver. The world remains dependent on palm oil, and we just hope that we get sufficient supply, sufficient production increase in April, September to generate higher exports, which we urgently need in the world market. The US soybean balance, our estimate is 116.5 million tons of last week. Yesterday's report of USDA was 116.3. It doesn't matter, probably it's 117. The message is US production is rising by 10 million tons. 10 million tons. So we have the oil. The oil is available in form of the seed. We just have to crush it. Unfortunately, the soybeans are not in the right place. They need soybeans in Brazil and in Argentina at the moment. The US are crushing close to capacity. Export sales. We need US soybean exports to cover world demand. So you may ask the question, why is the soybean price not reacting? Why is the soybean price not reacting to the upward revision in US soybean production by 4 or 5 million tons over the past 6 weeks? Not reacting. It's discounted already in the price. And the upward revision in the crop was offset by the realization that we need this stuff. We need the US beans. And this 56 million tons, most of that will have to be in the exports, 56 million tons exports. You know, look the increase, 20 million tons within 4 years. This 56 million tons is almost exported by next March. Exports 9.5 million tons in October, 10 million in November, 7 to 8 million tons in December. You get it. China, other countries, North Africa, Pakistan, Europe, smaller rapeseed crop, and so on. The world needs soybeans. So the stock's usage ratio of 8.4% is not really that big. Still, soybeans are ample. I would not rule out that we get $9.20 beans. Prices at the moment are above production costs for the farmers in the US, no question about it. Still, they have been relatively small sellers. Next problem is South America. South American soybean plantings are declining. It's difficult to find soybean area worldwide. So the market will soon start reacting to the weather conditions in South America. US is almost committed by next March, April, and then world demand has to switch to South America. If they don't produce enough, we are in trouble. Not immediately, but down the road. So we have to be careful. We need more soybeans. And we expect that world consumption of soybeans is faster, is larger than production again this year for the second consecutive year, so that soybean stocks decline. We still have enough. So there is no, I don't want to make a story about shortage in soybeans. We have enough soybeans, and the ampleness of soybeans will help to moderate the tightness in oils and fats. We just have to crush the oil. And it would be helpful if the meal demand would be better. Yeah? But for next season, 17-18, we may get a problem in soybeans if the US farmers cannot repeat the excellent yields of this year. So keep this in mind, and it is much too early. This is a subject we will be talking about probably next March or April. India, China. Very briefly, prices have fallen, world market prices have fallen to levels at which marginal producers are suffering. Marginal producers, particularly those in India, or in China, or in African countries. So farmers are running away from certain crops. Indian production is flat for several reasons. Vegetable oil imports are going through the roof. Very, very critical situation. The Indians have a higher soybean crop, but they have difficulties in crushing the soybeans because they don't get a margin at current prices, and they cannot export. The price is not competitive. The meal price in India is too high relative to the world market. So the soybean crush is limited at current prices to the Indian meal demand, which is a big problem. So the Indian farmers are hoping for a rally in market prices, probably based on, if we get it, on South American dryness. Then they have a window to sell. But at the moment, it does not look as if they can sell their soybeans. So this will keep Indian soybean crushings below potential. A widening gap, and this widening gap is continuing. India has to import 75, 76% of its total requirements of vegetable oils, which is not sustainable. And this is not food security. Very risky. They are now discussing reduction of import taxes of sunflower seed. This is not the real solution, because if they really do it, which I doubt, but if they do it, they wouldn't find the sunflower seed, and they wouldn't be able to crush it in crushing plants in coastal areas. So what they need is an import tax reduction for soybeans and rapeseed, or at least for rapeseed. Indian imports we think will be rising, continue to rise, probably to 16 or slightly more than 16.0 million tons. And due to the limited availability of soybean oil, we see palm oil imports coming back. We expect an increase of 600,000 tons in Indian palm oil imports. Most of that should be in the second half of this season. So palm oil market prospects, in our opinion, for the Indian market will increase. China, widening gap between crushings and production, widening gap, continuing problems, production declining, rapeseed crop 6 million tons at best, probably slightly lower compared to 12 to 13 million tons 3 years ago. They do have a problem. Crush capacity in China for soybeans 140 million tons, and they continue to expand. Crush utilization very small. China going to import, we think, about 85 million tons of soybeans in October, September 16, 17, and they will soon be going towards 100,000 tons. They are talking about import tax on soybeans. I don't think that they will really do it. Growing meal demand, contrary to the world. There is a good demand in China. Soybean meal consumption rising by 6 to 7%. Feed usage in total by 2 to 3%. The incorporation of soybean meal is rising. Attractiveness of soybean meal. That's a good point for China. But the oil situation looks a little bit different than India. Capita consumption is stagnating in China. They have lost the growth potential for several reasons, and this has been rather bearish. Imports have been declining, and our expectation, which we had 3 weeks ago, I think we have to revise this. The Chinese import requirements will not be recovering as we expected, and also because of this new decision of the government to release additional 2 million tons of rapeseed oil from state resources. This is bearish. So very briefly on biodiesel. Biodiesel is now 13% of world consumption, so it's important. It's important. We have to consider this as a very important element. 10 million tons of palm oil currently go into biodiesel. This is a swing factor to watch. Prices, of course, are above mineral oil because we are in a tightness. And this will continue until we have replenished stocks sufficiently. Surprisingly, biodiesel production in the current tight situation has recovered under the lead of Indonesia with the financing via the export tax, plus US. Very aggressive US expansion in consumption by 1.2, 1.3 million tons consumption increase this calendar year, partly because of production, and imports from Argentina have increased sharply. Malaysia is a different story. Malaysian biodiesel production remaining behind the target. At best, 500,000 tons, we think. Conclusion. The steep decline in stocks of around 5 million tons is a burden the market has to face for at least the next 6 months. The low stocks will offset the prospective growth and production of all oils and fats, which we currently estimate at around 3.5 million tons. So total supplies are still down. World export supplies of palm oil and soybean oil are likely to decline in October, March 16, 17. So keep this in mind. I don't think that importing countries have the possibility of replenishing stocks in October, March because of insufficient export supplies. They have to rely on an increase in production from South America from March, April onward, and in palm oil, hopefully it comes primarily from April, May onward. Stocks usage ratios in green in the oilseeds are still sufficient, but we are on a declining trend. But no need for concern. We still have enough soybeans. But if we get a weather problem, we are running into a shortage next season, and probably already in the second half of this season if there's a weather problem in South America, which is much too early to say, although at the moment soil moisture supplies on approximately 40% of the Brazilian soybean area and probably 25% of the Argentine soybean area, there are soil moisture supplies. Meal prices are going to decline, continuing to decline unless we get a weather problem in South America. Then soybean prices will appreciate, meal prices will follow, giving Indian farmers a better opportunity to market their soybeans. Oils and fats, lastly, high volatility over the past 15 years. The upward price trend, which started in September 2015, is not yet complete. We are going to see a further continuation, in my opinion, until the Jan-March quarter. Whether it goes beyond will depend on weather, on demand, on several other factors. But it is probable, it is possible that prices start a weakening trend continuing in 17-18 with normal weather from the April-June 2017 quarter onward. Big increase in production as a summary, but this is treacherous. Don't forget the impact of the low stocks, which eat up approximately 5 million tons of 50% of the anticipated production increase. And this has been discussed sufficiently, so keep this in mind. Total supply-demand balance. Just don't be satisfied with looking at production or exports alone. It does not give you the complete picture. Palm oil prices are undervalued at the moment. We still expect that prices will recover, and this could be sometime in the next 3 to 6 weeks. Palm oil recover on the back of rising import requirements, of rising purchases of importing countries. Many consumers are very short. Many importing countries are short. They have to buy, they have to come, and when they come, it will become obvious that physical supplies are still relatively low. And this refers to both soybean oil and palm oil. Much will depend on the selling policy of the producers, also of the palm oil producers here. But significant increases, don't forget this, significant increases in supplies from April onward, particularly from July onward, and into 17-18. We need another season. We need a second season, 17-18, to replenish world stocks. We need 2 seasons. This season is the first season. We need another season with no weather problems to replenish stocks to more comfortable levels. And there is good possibility that we get it. We expect that RBD palm olein in the export market will come very close back again to soybean oil. There is no need for an $80 or $90 discount to soybean oil in the next 5 months. And I think the market will realize this. Fundamentals do not support this. And I think it would be sufficient if palm oil is being sold, if at all, sold at a discount of $20, $30, $40. Sun oil is bearish, but following soya and palm oils, and yes, we expect sizable price declines if our production forecasts come true for April, September, and probably beyond. And finally, lauric oil prices set to decline in the next 12 months on account of weak demand. The weak demand, which we had expected already to set in earlier, has now really rematerialized. And the price losses of $150 we have seen over the past 3 weeks is part of this. It is demand-driven price losses. Once production starts increasing, palm kernel oil in particular, but also coconut oil, we think will be recovering next year. Stocks will increase because demand is poor. Demand has been curtailed. And it always takes time until lauric oil demand recovers. It's a time lag. And this time lag tends to overreact or tends to lead to overreaction in the prices. And you remember that palm kernel oil was sold at a discount to palm oil 3.5 years ago. I don't see this for 2017, but I expect the premium, which is still relatively large at the moment, to narrow considerably. So thank you very much for keeping the electricity on and the lights on. Thank you very much.
Thank you very much, Mr. Thomas. And thank you for doing your best to sticking to the time. We'll allow for one question. Does anybody have a question they'd like to pose to our speaker? One question? If not, you can catch him during the coffee break, our tea break later. Okay. We have one question. Okay.
Thank you, Iskandar. And good afternoon, Thomas. You have been saying a couple of times palm oil is important to the world. My question is, can the world live without palm oil?
No.
Then,
you often have politicians, NGOs, well, people who don't understand the market to be in the dreamland. So it is our job. It is our job to educate. And this, I think, is also the purpose here. This has an educational function, and this is continuing. This is what we do. And I have to be very careful not to be arrogant, because I also make a lot of mistakes. But I want to educate, and I want to help to better understand the global market. And I talk with politicians, and the best discussions are taking place in closed doors. We have an educational job, particularly if we get new ministers at a new position. We have to explain them how the situation is. But no, without palm oil, and those who say the world would be much nicer without palm oil, they do this on the back of the poor consumers. This is arrogant, in a way. Yeah? But you haven't asked your question yet.
yes, that's why I want to answer from you before I proceed, because we see that there are many problems uttered by the NGOs and so forth. So if Malaysia to maintain the acreage, assume we maintain acreage, then the supply will be down.
You have to raise it.
The price will be up.
You have to raise it. You have to raise the acreage, and particularly, you have to raise the yields. And even in this culture, where this has a lot of, let me say this, even in this culture, it is difficult to bring about changes. You have to tackle this, and you have to find the reasons for low profitability of some sectors of the industry. And you have to solve it. You don't want to follow the line of copra, which is a losing track. 90 years old trees, 80 years old trees, forget it. Yeah? So no, you have to make your homework, and you have to get the productivity out of the land. In many cases, you can raise productivity by 20, 30, 40%. Do it. The world needs it. The world needs it. Have you raised your question? Not really.
Furthermore,
Okay.
because if you to raise the acreage means we are talking about sustainability again.
Yeah.
So why so? It's because if you increase the acreage, then you have problem to maintain a sustainability, and a sustain means do what you have at the moment. And as businessmen, if you sustain at this level,
Yeah.
and then your acreage is at this level,
Yeah.
your price is going to go up.
Yeah.
Yeah, that's
Yeah.
the businessman.
Correct. And sustainability, I think we don't want to discuss sustainability. That's becoming very academic. But we have to find the right way, and we have to find the right compromises. Life is full of compromises. We have to compromise. But we have to concentrate on feeding the world. And there are some sectors like biodiesel. We can think about biodiesel again. Fine. But not food. We should not compromise the requirements of the of the consumers in the developing world in particular, which spend 50, 60, 70% of their income on food. You have a very big responsibility here. We have a big responsibility as analysts, which we try to keep up. But you know, we all do a very, very important job. But don't fall into this trap of acreage freeze, losing. This is would be very, very big mistake on the back of the consumers. I think we shouldn't, never, ever do this. Yeah. Thank you.